What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 23rd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. Today we've got a very important topic to discuss that I feel a lot of people in the cryptocurrency space have concern over, but doesn't really get publicized or discussed in most crypto media. And it has to do with the question topic of central bank cryptocurrencies. Now, we've talked a lot about Facebook or JP Morgan coin here on the channel, corporate cryptocurrencies, but a lot of people still haven't gotten a good picture as to what a central bank cryptocurrency might look like. Again, anyone can create cryptocurrencies or digital tokens of some sort, so I think it's important that we understand what central banks as a whole are planning for potentially developing some kind of digital token or currency. Now, the good news here is that we actually have some decent information to work with. You would think this stuff is kind of secretive or kind of closed off for most people, but if you know where to look, you can find this kind of stuff. This is a speech from the Bank of International Settlements, from the head at the Bank of International Settlements, known as Augustin Carstens. And long story short, the Bank of International Settlements, to put it lightly, is the central bank of central banks. They establish the rules that banks across the world are going to operate under, known as Basel 1, 2, and 3. And they have all of the major central bank leaders and major banking figures and heads across the world meeting at the Bank of International Settlements from time to time every given year. But this recent speech from Augustin actually gives us a decent picture as to not only what data we have to understand where central banks are, but also where central banks think of taking a central bank cryptocurrency, and along with that, what their objectives are and some of the problems that they see with doing a central bank cryptocurrency, why he and many others are hesitant. So I know I've rambled on a lot, guys. Just want to give you a good framework for what we're going to discuss. Let's go ahead and dive into it. So we have to talk about the purpose here. I'm going to skip a lot of this introduction. He was speaking in at the Irish Central Bank, and he's been talking about more than anything, like how over time, what is money as a whole? It's a very subjective thing. He was talking about, payment systems, talking about a store of value, talking about a means of payment as well, something that I can give in commerce, and even talked a little bit about the history. I guess central bank, as much as I talk negative about central banks, I bet central banks share a lot of the same passions I do for the evolution of money over time. We used to use shells and different things like that for commerce, which weren't really good ways of money, which is why it evolved. But the one thing he emphasizes is talking about this future of a central bank cryptocurrency, what it may look like. And he emphasizes that this is really going to be playing on the inevitability of digital cash. That's a big portion of this. How economies, especially as he uses in the examples like Sweden, have been moving excessively from using physical cash. It's almost to where you can't use physical cash in many locations. This is very common in a variety of economies across the world where digital payments are at least preferred. This is a growing trend where we see that digital cash is going to be the framework for modern commerce. And we have a lot of questions when it comes to digital cash. How are we going to facilitate transactions? Who is going to be the facilitator of transactions? Are they going to be private in some way, shape, or form? Kind of like how if I give you cash, it's pretty much untraceable. Now there's some small ways you can do it, but it's pretty much one of the most private forms of payment you can do because there's no accounting system, right? So again, this is a really interesting topic to discuss, and it's been a growing trend in a variety of countries. This is a good chart here for Sweden, where basically you can see over the years here, from 2014 to 2018, cash has been on an immense decline here, losing a lot of ground, whereas debit cards have held pretty much stagnant here. And digital payments have been soaring over the past 4 years, going from somewhere probably around 10 to 12% all the way up to probably around 60, 65%. So very interesting trend here to see. Not to mention, you can see here with the age gap as well, how much Swish, which is a digital payment system in Sweden, how much you can see the difference in the age gaps here, where cash is losing ground with lower age groups, debit card has been relatively consistent, and Swish, the digital payment system, has been holding ground well with the younger audience, not so much with the older crowd. Now, going through here, the first thing that he emphasizes is the difference, and this is very important to understand when you hear about central bank cryptocurrencies, because it also explains a little bit as to where the whole corporate cryptocurrency phenomena is. There are two different types of central bank cryptocurrencies: wholesale cryptocurrencies and retail cryptocurrencies. So let's go ahead and knock out the wholesale one. if you want a good example of what a wholesale cryptocurrency would look like, it would look very similar to JP Morgan coin that we heard all the buzz about a few weeks ago. Now, why are they similar? Well, a wholesale central bank digital currency or central bank cryptocurrency would basically be a digital accounting system for financial transactions, very similar to that of SWIFT or other accounting systems that the financial system uses nowadays to facilitate payments and wires. And the reason it's similar to this is because it's permissioned. It's closed off to everyday participants. It's only going to be used by central banks and commercial banks who need to interact with this kind of back-end infrastructure. And this has, again, been a topic for a long time before cryptocurrencies came about, having a new system that central banks and commercial banks can use. Along with that as well, we've also got the topic of a retail cryptocurrency. This is something that's a little bit more on the topic of discussion that we should be interested in. And this is something that you and I could use for commerce, for goods and services. And it starts to bring in a question as to the role of central banks. Now, there's a lot of interesting things we need to dive into as we go through here. This chart right here basically lays out, what it could look like, in comparing the different variables here, 24/7 availability, being accessible at any time, anonymity, very important topic we're going to emphasize on, and interest bearing as well. So if we take a look here, cash has really two of these features. It has 24/7 availability and anonymity, right? Pure anonymity on transactions. But if we take a look across the board here at a central bank token, right? This is resembling the central bank cryptocurrency, retail cryptocurrency. It's a possible feature, right? Now, 24/7 availability given, but anonymity, that's where it gets a little bit off and on, right? Some central banks might want to have an anonymous cryptocurrency. I bet you would find this probably in some of the more private and then also financially free areas of the world, like Switzerland, things of that sort, who just kind of get the anonymity and the importance of anonymity in cash in that case, especially for small retail transactions. I think that's where I have my problem with when everyone's being treated like a criminal in that case. And they also have the topic as well of interest bearing, where basically if you were to hold a certain amount of cash, you might actually get interest on it in that case, just by holding it, similar to how you would in a savings account, which, again, would be cool. Cash, on the other hand, doesn't allow you to do that. So let's go ahead and talk about a few points here. So we've talked about the difference between a retail and wholesale cryptocurrency. Our focus really should be on the retail side. I have no problem with the wholesale cryptocurrency because it's an improvement on top of traditional banking accounting. I'm fine with that. If we're going to continue to stick with the same old banking system or have banks, I'd much rather it be that than what we have today, right? That's really inefficient. And you can read through the article and they kind of explain why that is. But we've also talked about how central banks might not have anonymity on these transactions, right? And another thing in regards to that as well, going into that really second point about not only is central bank cryptocurrencies possibly not anonymous, they're most likely not going to be private in any sense, they're also going to be centrally controlled. So they are going to be able to control monetary policy like they usually do. They're going to have a balance sheet that the central bank is going to manage, and they're going to offload and onload different types of assets. They'll be able to freeze transactions in many cases. These are things that Augustus doesn't really talk about in this speech here, and I'm not blaming him. He's got a lot of data here for pretty short speech. It's 10 pages, but these are the things that they're not talking about because these are just given in their eye that they need to manage these things. So that's a big difference between cryptocurrencies that are usually finite in their monetary policy. How we know that there's going to be 21 million Bitcoin. We know that there's going to be an X amount of Litecoin, of Dash, of Monero, all these different cryptocurrencies. The big thing above all of this, though, guys, that people haven't really factored with central bank cryptocurrencies is some of the worries, but also potential next steps in the financial system that Augustine sees and mentions in his Bank of International Settlements speech on central bank cryptocurrencies. And that is talking about the growing role of of central banks managing money in the economy. And when we're talking about a central bank retail cryptocurrency, this isn't a cryptocurrency that you would use in the traditional banking system. It might be able to communicate with other people's commercial banks, but when you would initially open an account to store central bank cryptocurrency, this digital token. They're talking about it as if, in this case, where he's given a speech in Ireland, that you would not go to Wells Fargo or some kind of commercial bank. No, you would go to the Central Bank of Ireland. You would go to the Federal Reserve. You would go to the European Central Bank. You go to the Bank of England. You go to the People's Bank of China. And at that central bank, that's where you open your account. See, they're now possibly going to become the depositors of your wealth, not the commercial banks. Now, Augustine actually keeps quite neutral on this. He says that, if we decide that this is good, it might be, for example, that people feel safer with their money at a central bank because the central bank obviously is probably the last member to fail and any kind of modern economy, because that's where the money's printed, so they'd feel safe and that they would be almost practically FDIC insured in that matter. And along with that the central bank in this case, if they feel that the central bank can manage the kind of activities that a normal commercial bank does in a better manner and probably more predictable and safer manner, then he said, that's fine by that. But he's worried that they don't have enough of the staff, the resources, the tools, and capacity to manage lending and manage financial services, things of that sort, because they are becoming the bank at that point. Some people have talked for years about, and it's been a debate, I think, and looking for solutions for, kind of the central banking system. And that was, moving banking towards a more national level, right? Being a central hub for finance. And I think that even in the crypto space, as much as we dislike central banks, I don't think we really like the sound of that, because you're making things more central. You're making things have a bigger central point of failure. So anyways, I don't want to go on a tangent here, but these were really the major points here, guys. The last thing we're going to talk about is where cryptocurrencies are being developed under central banks. So right here, this is kind of the focus work here that they're looking at right now. You can see here that the vast majority are engaging in some form of research, looking into developing or are developing central bank cryptocurrencies. And that's continued to grow from 2017 to 2018. And I have no doubt that this is going to get very close to 100, because this actually might be a valuable step for a lot of people in developing economies in South America, where basically a variety of central banks in different varying economies can come together and manage a currency in a more smaller format, something not as big as the euro, for example, that has very vastly different economies, but having something where central banks can come together and have a say and keep everyone in check, rather than having what we have in Venezuela or in Argentina. But if you put those same countries in charge, it's going to be the same exact problems, right? So I guess that's where it's kind of a catch-22. Anyways, you can see that their focus work is a mixture of both, but also sometimes in wholesale or general purpose retail CBDCs. Now, going down here, this is really providing where we are at the moment. We see that some are very likely. I'm assuming this is probably Sweden, with the e-krona and things of that sort. Some are somewhat likely, and some say it's a possibility that in the medium term, which is about 1 to 6 years, that they could have a central bank retail cryptocurrency. And it becomes more likely as well on this end that there's going to be a wholesale CBDC. So taking that away, guys, we can see that more than 1/3 of central banks are thinking in the next 1 to 6 years that they could build a cryptocurrency. That's not as fast as I previously thought, which is, I think, some good news for the crypto space. We got to get building, though, because I think, central banks might be able in many economies to get people to be complacent. People aren't going to want to, for example, challenge the traditional banking system because screw the Federal Reserve. And it's the same reason why, over the last few years, I've seen it with the libertarian movement, why it's been stagnant at like 1%, because there's only a certain amount of population that really cares about that. What we need to do is build a cryptocurrency or set of cryptocurrencies that not only maintain all of the things we love about crypto, the cypherpunk libertarian kind of, challenge the traditional system kind of mindset, but also have the convenience and the incentive structure and the benefits that a central bank cryptocurrency wouldn't even be able to dream of creating on their currency, right? And I think as well, the standards of privacy and anonymity on transactions. I think those are very key and important. So, in conclusion, guys, that's pretty much it for the speech. If you want to look through it, it's pretty digestible. It's 10 pages. I'll leave it linked down below if you guys want to read into it. And you guys can also find it on the Bank of International Settlements website. Make this one of your resources, guys. I had someone ask me about where I get all my sources and everything. I have a abundance of different things I check on a regular basis, and this is one you guys should check out. You guys should go follow them on Twitter. I'm not trying to promote the now I sound like a shill for the Bank of International Settlements. That's not good. But you should go keep in touch with them because they have to put out this information. The reason being is that the Bank of International Settlements, as I mentioned, is the central bank of all cryptocurrencies, or of all central banks. And with that, they have to share information because they need to interact with central banks and be clear about the established rules. So you actually get a lot of information from this relatively private bank as to where they stand at the moment. And when you have the head of the Bank of International Settlements being able to put out this much information and this much substance as to where they're thinking they're heading at the moment, and understanding where central banks as a whole are heading, it's extremely valuable in my opinion. But I'd like to know what you guys think down below in the comments. What do you all think about all this information that we discussed? What do you think about the direction of a potential central bank cryptocurrency? Would you use a central bank cryptocurrency, or would you bank with a central bank? That's weird to think about. That would be very different, and I think some of the commercial banking system probably wouldn't take too well with that. Either way, we'll see what happens, guys. That's it for the video. Thank you all so much for watching. I hope you all have a fantastic weekend, and I'll see you all in the next video. Stay tuned.